Today we will be asking about Hong Kong market, both FX and gold. So we start with FX. Okay, we have several questions for you. First of all, this is not really FX limited, but how do you see the Hong Kong economy at this moment? It looks like, I mean, I landed yesterday, and we tried to book the restaurant tonight. It was pretty tough. I mean, we tried like several restaurants and all full. We couldn't really take a table, so it looks like that means the Hong Kong economy is quite good, isn't it? Is it correct?
Yes, I would say the Hong Kong economy is still performing quite well despite all the global headwinds, and also some guys will put the potential tariff issue between US and China will be a bit of a problem. But in general, the basic or the fundamental picture of Hong Kong is still quite promising. So the GDP growth is still very good. We have a very tight labor market. It's not difficult to find a job. So the unemployment rate is really low. But if you want me to describe the economy in Hong Kong with, say, one word, I will use freedom. Freedom is I would say, is the most outstanding and well-known character of Hong Kong economy. So say, for example, Hong Kong is ranked number 1 in 2018 by Economic Freedom of the World Index. This study, in fact, was done by Fraser Institute in conjunction with the Economic Freedom Network. We are also ranked number 1 in 2017 in the Index of Economic Freedom. And this study was hosted by American-based Heritage Foundation and the Wall Street Journal. So that's why in Hong Kong, there's no capital control. And people are free to invest, free to do business, and of course, free to open restaurants. And also people are so happy, are so eager to find good food. And so that's why the Hong Kong, so the better restaurants are not that easy to book until you have advance booking. So of course, all this freedom is subject to the laws in Hong Kong. As long as you are bound by the Hong Kong law, you are free to do most of the things.
In Japan, the FX trading is becoming quite popular. I mean, for the investors, general investors. How about it in Hong Kong? People trade FX quite often, or rather not?
Yes, I would say Hong Kong people are quite like FX, naturally, because sometimes they have the needs and sometimes they have the investment needs as well. And especially Hong Kong people are wide open to the world, to opportunity. So they tend to invest in FX for usually 2 reasons. The number 1 reason is that due to their needs. Say, for example, if the one Hong Kong person, they have overseas investment, like they have bought a property in other countries, or have children studying abroad, then they will need the foreign currency, and they will spend time in studying that currency by maybe reading some articles by the experts, or watch even the TV. You can always see TV shows talking about FX in most of the financial channels. And then by then, they will use this kind of information to analyze and then wait for the best timing and levels to accumulate the currency they needed. So, and the number 2 reason is for wealth preservation and profit potential. So if this investor think that the one currency has good upward prospect, especially with a high interest rate, then they will absolutely do not mind to invest in those currency to grow their wealth and then fight against inflation. So that's why within 2 reasons, based on their needs or based on the investment view, they love FX.
Okay. More particularly, do you have, I mean, Hong Kong people have any preference on the any particular FX pairs?
Well, in Hong Kong, Hong Kong investors are interested in current pairs usually that can generate higher yields and with appreciation potential. Say, for example, Aussie used to be one of the favorite because the interest rate in Aussie dollar was very high. So especially when Aussie, the interest rate during 2008 was at 7.25%. But afterwards, the central bank, the Reserve Bank of Australia, cut the interest rate down to the current 1.5%. Then maybe the interest on Aussie lower a little bit. And then another one is like the renminbi. When, say, for example, China introduced the CNH in Hong Kong, we saw the CNH appreciate from US dollar against CNH from 680 in September 2010 down to 6.01 in January 2014. The currency renminbi was up more than 10%, and also by the time the interest rate was really high. So that's why people are interested in this kind of currency, either with higher yield or with appreciation potential. And recently, since the US has started its interest rate normalization cycle, and interest rates have been hiked 8 times already. So, and for UK, it's still bordered by the Brexit issue. So Hong Kong investors turn to the sterling US much more recently.
Really interesting. In Japan, generally these days, they really love emerging country currency, like South Africa, Turkey, Mexico. So it's a little bit different. I mean, here, as I hear your talk, I think it's more like based on their own lifestyle and more theoretical about their investment on the FX. Japanese people really love emergency currency. I mean, emerging country currency because of the interest rates too high and because of this volatility. So a little bit different stance. Okay.
I can maybe supplement one point because this kind of emerging market used to be the favorite of Hong Kong as well. But during the Asian crisis back to 1997-98, and then again in the year 2000, this currency depreciated a lot, in fact, and burned many investors' fingers. So that's why the Hong Kong people tend to avoid this emerging market currency because they understand that even though they have a really high yield, high interest rate return, if the exchange rate drop like so much, then it still cannot compensate for the loss. So that's why recently they would turn to like the major currency, the G7 currency, and also the renminbi.
I think that's a very good point for Japanese investors. You know, people just go for the emerging countries. So, okay, that's very good. The last question is that how do you see the future of the Hong Kong FX market? We would like to have your opinion.
Yeah, I would say that the future prospect of FX market remains very promising. With the freedom framework we are enjoying, an investor can conduct their own investment according to their needs and also investment view. But one obvious trend may be the wider use of electronic platform to execute trades on their own for individual investor. And for some investor with a bigger size, they will turn to FX advisor in banks or private banks for the recommendation. And sometimes if they have a huge investment projects overseas, they tend to use several banks and houses for different strategies recommendation. Hong Kong will also benefit from the opening up of the current account in China. So Hong Kong, with its expertise and experience accumulated through all these years, could be an important gateway for overseas investors to go into China. So anyway, I would say that Hong Kong FX market would continue to flourish and grow in the future.
Great. Thank you very much.
Thank you.
Okay, now we are having Mr. Anderson Chen, who is the charisma of the Hong Kong gold market. I've known him like for 30 years, almost 25 years at least.
More than that.
So he was already a trader when I get started, and we are both still in the business, so which is very long time. And he was he's been in Hong Kong for that time, and he knows the Hong Kong market from A to Z. So we're going to ask about Hong Kong gold market today, which was actually the center of the Asian gold market when I get started. So let's see. First, could you explain a little bit about the history of the Hong Kong gold market?
Sure. It's my pleasure to talk about the histories of Hong Kong gold market. Actually, at the very beginning, more than 100 years ago, in 1910, there is a small exchange set up in Hong Kong for doing money notes and gold, silver, trading. So at the very beginning, it was unofficial, not government related. It's the private people set up a group and then doing trading. And then that exchange become getting more and more formal and bigger. And later on, from time to time, due to the environment, especially after the First World War, when the gold standard was cancelled, then the people start to invest on gold. And until 1974, Hong Kong government released the gold import. Private can own gold, and you can carry in and out free to Hong Kong, and then the market getting more and more active.
That is after 74?
Yeah, 1974.
Okay. Oh.
So, and then after 1974, some overseas banks, like from Zurich, the Free Swiss Bank, plus some Germany bank, and then some London fixing member. At that moment, there were 5 London fixing member. They all come to Hong Kong, set up their office step by step. That is from around late 70. So I joined the market in 1978 with one local house called Sun Hong Kai Security. And at that moment, I could see many overseas companies come to Hong Kong. And the gold market become getting more and more international.
Yes, I started my career at 1986 in the gold market. And at that time in Hong Kong, so many gold bullion houses. Of course, as Anderson mentioned, SBC, Credit Suisse, UBS, Deutsche Bank probably, and Rothschild,
Sharp Spixley,
Sharp Spixley,
Samuel Montague,
yes, Samuel Montague,
Mocatta,
yes,
Johnson Matthey,
5
fixing member.
Those fixing members at that time, and also like Freeblock, Derby, Hong Kong, and Citibank, Lehman
Bank
Brothers,
of America, yes, Shearson.
So lots of traders in Hong Kong. Yeah, that's good old days.
Yeah, and then around mid of 80, I saw some Japanese trading firm also, set up the gold business from Tokyo. And then because of the trade at that moment, most important, maybe let me explain why Hong Kong gold market can be so success in Asia before. First of all, there are many factors can make Hong Kong was leading the gold market from 1980 until maybe to 2000, 2005, something like that. So many reasons, especially from 1980, the political situation was steady because Hong Kong was the colony of United Kingdom. Political very steady, and then free trade zone is allowed to trade very free, and then they respect for privacy, okay, and also the law and legal is was very good. Plus the transportation, we are in the middle area, and plus the financial background and control is very tight. Those factors help Hong Kong at that moment can lead the other country like Singapore or some other area like Taiwan around the area becomes a gold center. Plus, also another factor is the time zone. After New York, the biggest, the most active gold market closed, there was a gap until London arrived. And Hong Kong time zone exactly can fill the gap after New York closed, and then in the morning we open until London come in and make the gold market become 24 hours. So those factors are very important. And the gold market was very active during 80, but until 1983, when the Hong Kong currency faced a crisis due to the people losing confidence, as we are talking about 1997, Hong Kong will return to China. So the local currency was depreciated very quick. It made the local gold tail market very volatile, and it create more opportunity for overseas gold trading house doing arbitrage between the local market and overseas market by different currency. But after 1983, Hong Kong government want to make the people have confidence with the current local currency. So they decided to peg the exchange rate 7.8, $1 against 7.8. Then the local tail market become that quiet and getting more and more quiet.
Okay, so because Hong Kong dollar is pegged to US dollar, there's no FX movement. That would give you less chance for doing the arbitrage. That's
Exactly. You're right. More or less like in case dollar yen pegged with US dollar.
Right.
Then it's no movement. That you trade yen mean you trade US dollar gold. So one currency. So less chance for doing arbitrage. So it also make the overseas company withdraw or step out from the Hong Kong gold market after maybe 10-20 years, as the situation won't not change. And the pathway system seems very important to keep the people holding confidence with the local money.
It's very educative and interesting history. Okay. Do you have?
So that is the histories of Hong Kong gold market at the very beginning, before 2000.
Right.
And after 2000, we can talk about maybe China. So China, the Shanghai Gold Exchange, the country start to open to the outside, and then they want to do it step by step, and they use the gold market as the first financial product to test, because Chinese people like to keep the gold for investment as their private assets. So the ones when the Shanghai Gold and Silver Exchange set up, they copy the system from the Hong Kong local tail exchange. So we can find out most of the regulation and rules actually is same as from the Hong Kong tail exchange, Chinese Gold and Silver Exchange. And then because of the trading volume plus the country strongly support to the Shanghai Gold and Silver Exchange, then it become more and more important in Asia time zone. The trading volume even catch up over Hong Kong, local London plus the local exchange, and even higher than the Tokyo Commodity Exchange. Tokyo Commodity Exchange was once very strong in 19th century to 2000, beginning of 2000, was leading the gold market in Asia, replaced Hong Kong's position. But after 2000, probably 05, 06, then especially after 2010, then the leading position moved from Japan to China at the moment.
Yes, it's for us. It's quite kind of sad situation, but it is true that Tokyo has been center of the Asian gold market, like from, I would say, in the middle of 90s till in the middle of 2005, 6, something like that. But after government restrict the marketing sales process of token brokers, and yeah, I think that triggered some the withdrawal of the investors from gold market in Tokyo. So, but now, as Anderson mentioned, China came into the market, and it becomes bigger and bigger. So, I think Hong Kong is now, was the first entrance of the entrance to the gold market in China, because Shenzhen, just over the border, is the biggest physical base for Chinese gold market. And of course, the market is in trading market is Shanghai, but the physical is usually in Shenzhen, and which is the next door to Hong Kong. So lots of gold is going from here to Shenzhen, and probably sometimes coming out from there to here. So I think the currently even Hong Kong is very important place for gold market, especially if you think about the China market, right? How do you see the individual investors' interest in gold here in Hong Kong? People love to have own gold physical, or people want to trade paper, or people don't really invest in gold at the moment? What do you think about that?
This question is actually quite, we can see it from the import figure to Hong Kong. At the very beginning, it's local people, not much, investment channel, and then the only one thing for Chinese people, very simple, is buy gold to keep it. So strong interest I think should be between, especially from 1970 to 1990. But as gold is low interest earning, plus also sometimes when some, let's say, Middle East war or some tension in Asia, let's say between South Korea and North Korea, it couldn't make the gold rally, and then the investors start losing their interest, only rely gold for investment. But Chinese people like speculate, so it was very popular from 1980 until I think till 2000. I'm talking about Hong Kong. Many people like to do paper trading, margin trading. So that's why many local houses set up the operation to do gold trading. I want to say something about the Hong Kong gold market. Until now, we have a Hong Kong Chinese Gold and Silver Exchange, but this exchange is not regulated by any government organization here. Not, that means FFC, Stock Exchange, Hong Kong MA cannot, set rules or control them or regulate to this exchange. And gold is still the the product, you don't need to get the license, and then you can set up the operation here to trade gold. But Hong Kong Stock Exchange, the government want to do something, so about should be 3 years ago, Hong Kong Stock Exchange start to set up the Hong Kong gold trading from stock exchange, list on exchange. Even though that exchange is not that active and the volume is pretty small, but you can see that the government want to put everything more transparent and then protect the investor, because some people use this gap and try to do some bad thing with the investor. They are cheating their money from margin trading. They may provide low margin requirement and leverage for, let's say, very high percentage. So when the market has some small movement, they can easily lose all the margin deposit within a couple of hours or one night. So the government received many complaints from the general public, and then they try to control it. But it's not easy, because this Hong Kong tail exchange has more than 100 years history, and the people doing bad thing is not their member, not major from them, maybe one or two from the old days, but it's not the problem, not created from the exchange. So this is one of the things until now the government still cannot solve it out, how to make the Hong Kong gold market more regular. But in China, very much different. If you trade gold, you don't have license, you are out from the Shanghai Gold Exchange, then you are illegal. You are, if the general public can provide evidence, then you are criminal, so will be charged. So in this, this is the difference between Hong Kong and China gold market at the moment.
What do you see? I mean, this is kind of same question for the Ronaldo as well. But what do you see the future of Hong Kong market? I mean, in your case, like Hong Kong gold market, will it be as active as years ago? I mean, before, like our ages, or will it be a little more quieter, or will it all depends on China's activity? Yeah. What do you think?
I believe the Hong Kong gold market for the future is not so positive. It can't be back to like the age we saw between 80 to 2000, that 20 years. Because now the gold market is diversified in Asia, except China. Right now is the biggest trading volume market in Asia, but token, the Hong Kong local London spot market, tail market, Singapore physical market, and also some other small country is picking up. Let's say, so far I know, let's say in Bangkok they have their small exchange trading gold. Even though in Vietnam, I mean, it's a physical market, they also have their local London trading. And Taiwan, I mean, it's not popular, but also some investors, some general public, they also have interest. So I would like to say Hong Kong won't be, very important in the gold market in the futures. And I think for next, let's say 10 years, still probably China will be the most active one in the gold market.
One last topic is gold smuggling. Well, you already know, but I know that the gold smuggling is very, very big issue in Japan. And especially this year, two major purchasers, I mean, exporter of the gold, which is trading house, Sumitomo Sojitsu, and also us, Standard Bank as well. We stopped buying gold from the market.
Yeah.
Because we cannot tell which gold is smuggled, which gold is officially imported.
Yeah.
You know, I mean, up above the stream, we cannot really tell difference because both good delivery 49 kilobars, good delivery land.
Yeah.
How can we tell, right? So we don't really buy. I mean, so I think smugglers, they cannot sell the gold. Even if they smuggle the gold into Japan, nobody buys. So that's, I think, at the moment, the volume is getting quite smaller. Because lots of gold is coming from Hong Kong, they say. So do you see, I mean, anything that in that kind of point of view?
Reverse smuggling of gold, I can say it happened everywhere in the world. Let's say not only from China to Hong Kong, China to Japan, or Japan actually the people take the advantage. Let's say in India or whatever, Vietnam, some country, let's say they don't allow the people keep gold, then must be some reason. And the people is something related to the country economy. So they don't trust their currency. And then the people probably use any kind of method, even though pay very high premium and want to buy gold and carry to that country. Then it create, once when there is a chance, it create opportunity for those pirates to do smuggling. Okay, doesn't matter which country. So why it happened? Because I mentioned about that China become the biggest buyer on gold. But after some people buy the gold, their purposes are not actually invest on gold because the currency remittance out of the country are under control. So the people very hard, even though they make good money, if they want to remit the money out of the country, it's almost impossible. So that's why some people, pirate, use gold as a kind of product, smuggle out from the country. They don't care about the price, and they just want to exchange become other currency, and then the money will be out of the country, and then they can do some business or whatever they want from overseas. Then Hong Kong is next to China. Hong Kong become the place, the first place, receive this kind of smuggling gold. And at the very beginning, not so many people recognize for that. But the people from the market, let's say in Japan, you recognize so many scrap gold selling back to you. Then you will put a question mark. So we are in the market, then we recognize, we know. And then we talk to the the interbank people. They also saw the same things. Then we know this is a kind of smuggling of money. We add to the related people from China, the Shanghai Exchange, and then they think that it's very serious. It's the money, the people moving the money out from the country, and then it may hurt the country economy. So then the exchange try to set up some rules and regulation to stop it. Let's say in Japan you stop buying from unknown seller.
Right.
Same in Hong Kong, we don't accept those sellers cannot provide any certificate or evidence. We will check where the gold come from. But there are still some short, as I say, refinery, small refinery. They want to make money, and then they don't care about these rules and regulation. They melt it down, or they even try to make some free bar. Let's say they make Japanese band, and then they take the advantage of Japan government tax return is much higher than Hong Kong or China. So their aim for smuggling gold is not to Hong Kong anymore. That's why through Hong Kong. Maybe go to Singapore first and then to Japan, or from Hong Kong in old day from Hong Kong to Japan direct, and they are making very good money. Some people use the young people as tourists and carry 1 kilo, 2 kilo by a tour, and they tell the young people, I pay for you hotel accommodation, shopping 2 days, and your duty is just carry 1 kilo. Right. Okay. So even though the immigration found out 1, but they may have another 20 success past the immigration, they still make good money. So this is, what I heard from some people doing that. But I think once when the people are greedy, doing much bigger and bigger volume, then it will be easily found out and by the related government. So we and the exchange will, or the interbank people will try to do something, because we are doing business. It's not like this kind of smuggling. So it will hurt the country economy and also the reputation of the organization.
Exactly.
So from now on, I think this is slowed down already. But I think the smuggling still can't be disappear in the world.
Yeah.
Once any country has a very good regulation and rules, or they open their market to the public, then it can be prevent for this kind of smuggling.
Yeah, that's correct. You see, in Japan we have this smuggled gold, but Hong Kong had the same problem with China, coming out the gold of smuggling to Hong Kong, and we have a problem of the gold coming from Hong Kong or from Korea, from anywhere in the world, because of, in our case, because of the tax rebate. You can sell the gold 8% higher in Japan. You can buy the gold Hong Kong flat, right? No tax. And then you can sell, if you smuggle it in, you can get 8% more. And next year, 2019 October, the consumption tax rate will be up from 8 to 10.
Yeah.
So that
attract more people.
Yeah, incentive will be bigger. So this is really a huge problem. But this smuggling problem is as you said, it's everywhere.
Everywhere.
Anytime. We used to have like Dubai to Mumbai smuggling, and those kind of smuggling happens everywhere. So because it happened in Japan first time, right? So this past couple of years, so that became so large. So much money goes out from Japanese taxation office to overseas because of those crimes. So I think, as you say, it's now calming down, but they will find a way.
Yeah.
I'm sure, right? They will find a way. So I'm always saying that the only perfect way to abolish those smuggling is that we just stop the consumption tax over gold.
Yeah, only for that product.
Yeah,
I agree.
So
only for gold.
Yeah, but anyway.